Hey, listeners, welcome back to the ValueHunt podcast. And today I'm really excited to be here with Simon Henry, the founder and CEO of DGL Group, which we'll obviously get to what they do and all that. So, Simon, why don't you say a couple of words before I ask you the hard questions that our audience sent in? And I also have some personal questions that I would like to ask you. So, yeah, before that, probably you could say a couple of words.
Thank you very much, David, and thank you for inviting me along today. I'm Simon Henry. I live in Auckland, New Zealand. I'm the founder, the CEO, and the majority shareholder of DGL. DGL is a vertically integrated chemical management company listed on the ASX exchange in Australia. We operate from 85 sites stretching from the north of Australia to the south of New Zealand. Revenue around $450 million a year, around 900 staff and around 5,000 customers. We're quite unique in the world as far as I know. We're the only vertically integrated chemical management company operating. Back to you, David.
Perfect. So yeah, the audience was really curious and today they asked a lot of questions. So I'll probably look down a bit to my iPad so I can ask you all the good questions from the audience, and then we'll get to my questions at the end. Actually, the first one is, how are you ensuring that everyone in the business is aligned and working towards the same goal? I think it's a pretty loaded question, but I think you got this.
It's a great question, and it's probably one of the single biggest challenges for a CEO is to get all employees singing from the same hymn sheet and interacting with customers in a similar positive manner. It is a challenge. I enjoy the challenge. I relish the challenge. I stay close to the businesses. I hold regular town hall broadcasts across the group. We do our best to keep a flat management structure. I get regular feedback from all sites, and I use that feedback to continue to grow a uniformed group culture. But it's a challenge. There's no way to shy away from it.
Yeah, for sure. So I think that the next question we have here is pretty much on the same topic, and it's actually on the current bottlenecks that you're facing in the business. So you could probably expand on that.
Yeah, so there are several bottlenecks. I'm not sure which one I should start with first. Australia has very low unemployment, around 4.1%. Long-term average is 5.5%. So finding staff who are qualified to drive chemical tankers and operate in our plants is hard work and very expensive. We also have, in some of our plants, we're running at over 100% capacity. So finding new sites with all of the licenses is a challenge. We've grown rapidly, several 100% since we listed in 2021. And with that comes some sort of catch-up work to do. We are rolling out an ERP system across the group, but in the interim, we are running multiple clunky software systems that don't talk to each other. So you end up with a significant investment back into the group to uniform and integrate all of these different companies we've bought onto one operating platform.
Yeah, I think that must be a big challenge, actually. So the next question is on the integration of the acquisitions, because he's asking if you believe that the foundation is strong enough to pursue further acquisitions in the future.
So we've been quite public in stating that our focus now is on integration and extracting organic growth out of the assets that we have acquired over the last 25 years. That's our primary focus. That said, we're a pragmatic company with a strong balance sheet, and if the right asset comes along at the right price, and has significant strategic value, we will acquire it.
Okay, so I'll have to ask a follow-up on that. This wasn't in the question, but how do you figure out what's the right price to pay for an acquisition?
Well, we've bought 30 odd businesses since listing in 21, so we've got a good idea of what we need to pay for the assets we need. Look, there's no short answer to that. It really depends on its underlying physical asset value, its customers that it brings into our network, it's the licenses it might hold, and whether they are licenses that are easy to obtain or close to impossible to obtain. So really it's a case-by-case basis. We don't have a template for it.
Okay, perfect. So now looking more into the market and the competition, a viewer asks, has competition intensified or softened in the sectors that DGL operates in?
Overall, since the end of COVID, competition has increased simply because supply chains have opened up and people can move around. There are three elements that I promote in the company which go to our ongoing prosperity, which are connected to competition. That is, we need to be the cheapest. And I mean not like a discount store. I mean the most efficient with the lowest overheads so that we can operate cheaper than our competitors. Secondly, we need to have the best quality, and that's quality of product and service. And thirdly, and it's really interesting, we need to be the fastest. If you order some material on Monday morning, you want it delivered on Monday afternoon. You know, the online shopping and Amazon has made everyone really impatient. The good old days, you'd wait a month, but these days people hate waiting more than an hour. So you've got to be really agile, even with complex chemicals.
Yeah, it's quite interesting that you mentioned that Amazon has impacted your business in that way. I wouldn't have thought about it before.
It kind of has. I mean, I've got friends in London who do their grocery shopping on Amazon, and from the time they get up and hit their phone to the time they've had a coffee and a shower, the groceries are at their doorstep. It's phenomenal.
Yeah, that's crazy.
And, you know, in New Zealand and probably in Portugal, you know, you've got this Temu thing from China. And, people are buying stuff overnight from it. You know, it's just, and I'll tell you what, it permeates down through industry. People want their chemicals and services delivered quickly.
Yeah. That's actually an interesting spillover effect into other industries.
Well, I don't mean to digress, David, but you look at politics now. You look at X. We expect to hear from politicians within minutes of them making a decision. 10 years ago, you got the newspaper the next day and read about it. That's old news now. So the cycles of everything have really sped up.
Mm-hmm. That's an interesting challenge, and probably we can delve a bit more into how you manage to become faster and better and all that. Actually, if you want to expand on how you are becoming faster.
What I do, and I really enjoy the challenge, is that we're talking about logistics. We're talking about moving materials predominantly. DGL is a logistics company, but it does more than just have a warehouse with stuff coming and going. But primarily we source material in China, we bring it to Australia, we formulate it and pack it, we put it in a warehouse, we deliver it to a customer. So everything we do is about logistics and planning. I sometimes liken it to a railway marshalling yard, you know, where you have lots of different tracks and you've got trains on different tracks. And that doesn't really work if you want to make the train go in one direction. I need to line up all the carriages, all the cars on one track. So I actually go into the business. I talk to someone who receives an order. How do you receive the order? What do you do with the order? Where does it go? How does the instruction work? And when does the customer get the material? And a lot of a lot of it's improving with automation, with customers ordering on their cell phones or on tablets, that order being automated into our logistics process, and then that being fulfilled and signed off on a tablet.
Yeah. So circling back to what you said before on the ERP and all that, I guess that's a pretty important piece to make that work and to increase the speed.
Yep, that's it.
Okay, so next question in competition is, if you had a silver bullet, which competitor would you rather not have?
All of them.
You have just one silver bullet.
Yeah, no. Look, I don't know if it's appropriate to name one company, but there are several companies. I look at MainFreight, a New Zealand international logistics company that operates throughout Europe. They are very good at what they do. They are, silver bullet, I admire them, so I wouldn't be comfortable with the bullet, but, they are a really slick operation with an incredible work culture. Do I copy them? Are they my mentors? I aspire to be a little bit like them. So that's probably the answer. MainFreight, based here in Auckland, but operates internationally.
Okay, so but are they actually in the same industry as DGL?
Yeah, they do. They have a subsidiary called Chem Couriers, meaning chemical couriers, which is a subsidiary of MainFreight, and they do operate in a very similar field to us. That said, they don't do any formulation or pump outs or transferring of bulk chemicals, but they are very slick at what they do.
Okay, got it. So now moving more into acquisitions and expansion, I guess we already touched a bit on it, but how important will new acquisitions be in the future going forward?
Much less so. If it came about that we never bought another company, and that won't happen, but I use that as a hypothetical answer, DGL now holds the licenses, the capacity, the knowledge, and the customer base to grow strongly year on year organically from the operations that we have.
Mm-hmm. And
that's
as
been
a follow-up,
the plan since listing.
Sorry. Okay. As a follow-up, another listener says, Simon mentioned focusing on filling gaps with the acquisitions. How many gaps are still outstanding?
Well, the environment that we work in isn't like a neat jigsaw on a table where you're just missing one piece of blue sky and then you're finished. We are more like a stone in a pond. We ripple out. So we can keep on going forever, technically. Look, there are elements of operations. I mean, you think about chemicals, they're either liquid, powder, gas, or what we call prills or pellets. So they're the sort of main forms. We want to expand our pellets. They're sometimes known as prills. You can broadcast little pills onto your farm instead of spraying it, and you can control where it goes better. So we need to do more of that work. We need more flammable goods storage across Australia. We need more chemical tankers. We would like to treat a wider range of end-of-life chemicals. So really, I want you to look at it as the stone in the pond sending out shockwaves. We can keep on going forever. I don't really see us as having a glaring hole in the business today.
Okay, this is kind of a tangent here. No one asked this, but I'm actually curious. In your opinion, if DGL were to stop for a week, what would be the effects on Australian industry and all that?
I ask myself the same question, and it's quite interesting. You sort of, it's a bit of a sort of an ego trip, isn't it? To try to think to yourself, how
Yeah.
important am I to the world? So it's a bit shallow to think and modest, but I think it'd be quite diabolical because we handle all sorts of really critical materials.
Yeah.
If you stopped for a week, they'd never trust you again. So
Okay.
we're
Okay.
very much of a 24/7 operation.
Got it. Got it. So, with that said, any plans for expansion beyond Australia and New Zealand in the next 10 years?
Look, we export and trade all over the world, all through Europe, North Africa, all through Asia and India. I most certainly don't rule out some form of chemical formulation facility in Asia, particularly Thailand. We've also looked at businesses in Texas, which is Texas is the home of chemicals in the US, America, and not just under Trump, but America is still a business-friendly country. Where other businesses we've looked at in Western Europe, it's becoming increasingly difficult. We've got all the work we need in Australia and New Zealand, and I'm a firm believer in understanding your market, the really understanding how you're working and the challenges and the legislation and so on. But to answer your question, we are investigating some form of partnership in Asia for formulation, and we have looked at a number of businesses in the US.
Okay. Yeah, I think that answers it pretty well. Now, moving on to leadership and culture, there have been recent leadership changes, CFO, COO, board members. Can you discuss this turnover and the importance of culture and retaining talent?
Thanks for that. So we were a New Zealand business, but New Zealand only represents 7% of DGL's activities. So we thought, and the board recommended, that we establish a head office in Sydney and in the middle of our backyard of where we do most of our work. So that required us to find an Australian CFO experienced with the Australian business culture. Our New Zealand CFO, Rob Perkins, was a wonderful gentleman, but he'd only worked in New Zealand and hadn't worked in Australia. Our COO, we didn't really have a COO. Ryan from Christchurch filled in through the IPO. He's the head of our procurement. Alex Wing is our COO, based in Australia and doing a very good job. So I really see the management changes as a result of our rapid growth and evolution into an Australian company.
Mm-hmm. Why do you think the market really likes this kind of consistency in the management team, even though we all know that businesses are quite dynamic and as they grow, they need to adapt, right? So I would like just to know your take from a CEO perspective.
Businesses are like governments, aren't they? If you change your prime minister every second week, you look unstable.
Yeah.
If, employees, suppliers, shareholders all like the idea of quiet stability. I mean, you look at Warren Buffett. I mean, it's really hard to think of any change. And to a lesser degree, Microsoft and these great companies. Apple would be a good example. You've seen, in our lifetime, we've seen 2 bosses of Apple, nothing else. So, of course, it just looks, and it's just cohesive. But that said, we've grown very rapidly, very quickly. Most of our senior managers had never worked in a listed company environment, which is completely different than a private company. In many ways, you need specialists who have that experience.
Right. Interesting. And do you see yourself in this role in 5, 10, or even 20 years? What are your main motivations and long-term vision for the company?
I'll answer the question very honestly. I turned 60 this year, which is a shock to even me. I'm really happy in my job. I enjoy running the company. I've got a great group of people. We've got the foundation of a great company. I'm good at delegating off a lot of sort of daily operational activity to our CFO and our COO. So I'm quite comfortable to sit here for at least the next 10 years driving the growth and integration.
Mm-hmm. Interesting. And what about what are your main motivations and long-term vision for the company?
I have this fundamental idea that working hard is healthy.
Okay.
I enjoy working hard. I've always worked hard. I want to demonstrate to my children and that sort of thing that going to work is a good thing to do. I like playing a bit of tennis when I'm not working, but I can't play tennis 40 hours a week. So basically, I enjoy the camaraderie and challenge of commercial activity and doing what I do better, I hope.
Nice. Okay. Now, moving on to capital allocation. What are the return hurdles for new investments? I know you've talked about this in the past, and the market keeps bugging you on this one. But yeah, any updates on that?
So I do get asked regularly, and I'll explain it like this. If DGL has $1, it has 4 options. It can buy back shares, it can pay down debt, it can pay a dividend, or it can go and buy a new mixing vessel. So the board regularly discusses capital allocation. We've paid down quite a bit of debt. We bought some shares, but we don't want to reduce free float any further at this time, but we remain pragmatic. We've stopped buying companies or slowed down. So really we're looking at what we can invest in the business to sustain ongoing organic growth. That's our main focus today. Whether that be more trucks, more mixing vessels, larger sites.
Got it. This other shareholder kind of wants a very detailed explanation of a typical investment. He says, can he walk us through a typical investment, entry multiple, operational improvements, capex investment, and stabilize ROIC?
Gee, that's tough because we don't normally give out granular detail. I just want to talk about a couple of businesses that we've bought. We bought in MHF, a major hazardous facility, just south of Sydney in a suburb called Ingleburn, Australian petrochemical storage. It's a purpose-built flammable chemical storage facility capable of storing 12,000 tonnes. It's a phenomenal facility, fully licensed, that would be very hard to replicate today. It is meeting its profit forecast to the dollar. It's completely on target. We are integrating it into our wider group and bringing all payroll and accounting and all of the management systems into the wider group. The site's running at 85% utilization, which is spot on. You don't want to go much higher than that. The customers we serve there, we are serving wider afield. We might have been with them before we took over the site, or we've got them there and we've taken them to other assets. So that's a great story. I think in 2021 we bought Opal, which is in Kwinana, south of Perth in Western Australia. It's been ticking along at 5 to 6 million litres a year of ag chem production. We invested in automation in the plant, and its production this year is hitting 10 million litres. We've paid for the business in the 3 years that we've owned it. So not all businesses we have bought are that successful, but you gave me the microphone, David, and I've answered the question.
Yeah, sure. I think that already helps shareholders figure out the power of acquisition. So to operational improvements and competitive positioning, we have we have here a viewer that asks, he previously mentioned admiring MainFreight's unique long-term culture and team driving P&L ownership. What similarities and differences does DGL have with MainFreight? So I guess he knew more than me in this case.
Yeah. So MainFreight have this culture where each site owns its own P&L. It's not part of a division. So that's something that we are working very hard towards, where the site manager, I sometimes call them ship's captains, they own the site. They are responsible for everything that happens on the site, for the welfare of the environment and their staff, and for their interaction with the customers. So we are really strengthening site manager ownership in the business. In Sydney, we have created what we refer to as a shared services hub. We refuse to call it a head office. We think that's the wrong message. And as I tell our seniors in the shared services hub, we are servants of the plants. We are not the masters. We provide the support to them for them to do their job. We don't bark orders at them. We support them. So really what I'm looking to establish in DGL is a sort of a hybrid of what MainFreight has in management culture across its business, but not obviously identical.
Okay, got it. So, what kind of really practical long-term culture and incentives are you fostering within DGL?
What I look to is sort of individual responsibility, where everyone is acknowledged as being important and their contribution to the business is recognised, where people don't just feel that they're a number, where DGL is providing career opportunity and training and a place where people want to come to work. I'll quote you my mantra for staff, and that is, we want fewer people working better paid. So that's the sort of approach we have to it. We want people working on good machines and automation with the latest management software, producing more and getting paid more. So it's all about productivity.
Nice. Yeah. So, like, considering the past challenges with cost increases eroding margins, how does DGL plan to pass on these cost increases to customers in the future to come?
Well, of course, we do pass on cost increases where we can, but that's not always possible. But what we can do is discipline what we spend or our expenses. So the significant investment in this ERP system and the shared services hub in Sydney will reduce what I refer to as our unit cost production. So through having more and having streamlined systems, your expenses are lower, which allows us to retain our margin and still be competitive.
Got it. Okay. I think that answers it pretty well. Were the most recent results in line with expectations? If not, what went wrong? And I think this relates to, I guess, the increase in revenue, but not in the bottom line. So more on the operational leverage and all that people would expect.
So
but yeah,
the sort of the three driving factors of what we consider a poor result. One is the development of the shared services hub, where we've effectively got the management structure and finance department in the shared services hub, but we are replicating what we have spread over 85 sites. So throughout this year, we will be strengthening the off-site services hub and scaling back the sites where they manage their own finance and this sort of thing, and it's centralized. So there's a double up in costs there. They're substantial. We think they could be as high as 10 million. We do a lot of lead acid battery recycling. We need the sulfuric acid in our treating other wastes. and there's been a significant uptick in competition for batteries in Australia. That division in the past has earned as much as $12 million in any 12-month period, and it is now running at a loss. So that's had a substantial effect on our business. And the other challenge we face with the modern accounting standards is that when we move to a larger premises and we have a period of double rent from the old premises to the new premises, even if we are not paying rent, we have to account that we are paying rent, referred to as a rental holiday while you get established. That now has to be amortized over the term of the lease, even though we're not actually paying rent. So they're the three key factors.
Got it. So another viewer asks, does he regret going on an acquisition spree now that it feels they're not able to integrate properly? Obviously, I don't know if you agree with the second part, but probably you can answer the first one.
No, I don't regret buying as many companies as we have bought. If I was doing it again, naturally I would do it differently. I would look to integrate them fully earlier on. Hindsight, wonderful thing. Of course, you don't go and buy an ERP system and then plug businesses into it. It all evolves. So no, we're completely comfortable with what we have done since listing, but we are acutely aware now of the need to slow down acquisitions and swing back to ensure that we've got full integration and full cost efficiency out of the assets we've acquired.
Perfect. We are getting closer to the end of the questions from the viewers, but what is your vision for DGL in 10 years' time?
I would just like to see DGL bigger and with sustainable profit growth, and for DGL to be very much of the industrial landscape of Australia and New Zealand as an indispensable, integral supplier of services and materials to the chemical industry. That, if that's where we get to in 10 years, I'm going to quietly tell myself it's worked.
So, actually, I have a personal question here. Was there any point in time in your career that you felt, wow, it really worked, or is it like still?
It's incremental. On day one when I bought my first chemical storage facility, I was quite intrigued by the industry. I enjoyed science at high school. I was just intrigued by it, and I sort of had no idea how much chemicals there are in our society and how they're stored and moved. And it was sort of like, a whole new world opened up to me. And I was just intrigued by it, how chemicals move around the world, how we use them, and how much physical work there is in their safe management. So I enjoy the work. I enjoy the industrial side of it. And, there is lots of change in the world today. We're seeing that all the time. But I can tell you that our consumption of chemicals is rising, not decreasing. The regulation on how we manage those chemicals is becoming more complex and enforced. And the community's expectations regarding companies and how they use and dispose of chemicals is significantly different than what it was 10 years ago. And we like being at the forefront of it. It's complex and challenging, but we like it.
Got it. So that's a perfect segue to the last question from the audience. Where does he see the biggest opportunities and risks for the company?
That's a challenging question. Opportunities for us are to continue to partner with the world's biggest chemical companies, BASF, Bayer, Syngenta, Mitsui, and other companies, and become their partner in Australia and New Zealand. I really see that as the growing opportunity, as being us being their tolling partner or logistics partner. Risks in the business. Well, we are a chemical company, so there are some obvious risks, but I don't see risks insofar as Amazon, and I quote them again, coming in and competing with us. It's not like that. As long as we stay agile and well capitalized and stay at the forefront of technology as it's rolled out, I don't really see any significant risk for the business.
Got it. Perfect. So that concludes perfectly the questions I had from the audience and viewers and all that. So now moving on to my personal questions, which are a bit more selfish because I'm just
David.
curious to know more about you. So I would like to know how your childhood was like, because I think it's always interesting to go back to the roots of someone.
I was born in 1965 in Christchurch. My dad was an electrician and my mum was a lab technician. I grew up on a small farm, a very small farm, but we also had a house in the city. Our parents installed a sense of independence in us, and a sense of, or impressed upon us, the importance of having our own thoughts and running our own race, and not necessarily agreeing with the crowd. Just to give you an example, I've never been to a rock concert. My father saw them as, a mass crowd praising a demigod. You know what I mean by that. Are you having a good time? Yay. That sort of Taylor Swift thing. And, that was looked down upon or questioned, and I don't disagree with him. My little brother went to a Bruce Springsteen concert. He broke the mold. So really we were taught the importance of independence and running our own race and being your own person. I enjoyed school. I didn't go to university, but I enjoyed school. I did well in science and other subjects. I became a keen reader at an early age. I've always enjoyed hard work, sometimes too hard, but I enjoy hard work. I've enjoyed traveling all my life and understanding the world and how it's put together. And I still travel and think about this. Reading history gives me sort of a great idea of how the world's put together and how challenges that the world faces today aren't new. You may be surprised to hear that 500 years ago, there were a lot of people concerned that the world was overpopulated. 500 years ago, the biggest complaint in London was that there was too much traffic congestion. So nothing's new. And then when I left school, I was just busting to be part of the commercial working environment. I went to the US for a while, lived in California, and, really was impressed with America's enterprise culture, how running businesses and making money was considered good. Not always the case in New Zealand. We put lifestyle ahead of wealth, which is nice. Maybe Portugal is the same, I would suspect. Sometimes I was criticized for working in the weekends instead of being with friends. But that's really, how I worked, and I realized the importance of surrounding myself with people who knew more about what I wanted to do than what I wanted to do. My father taught me at a young age to delegate and to trust other people because I wouldn't be able to do everything myself. And then really what I've done is just layer on business year on year ever since.
Yeah, that's quite interesting. Actually, there was one sentence that I got really curious about. You said sometimes I work too hard. What does that mean exactly?
working too hard is when you think you can work all day and all night, and your body actually starts to reject it, and you actually start to get sick, and your immune system suffers. So as I've got older, I've really learned to balance how I work and then how I, turn my phone and my computer off, and that's it. DGL has a strong culture that I've inspired, that we don't contact each other in the weekends unless it's an emergency, So at 5 o'clock on Friday, that's it. We turn our phones off, we go home, we play with our families and have fun. And 8 o'clock on Monday morning, we turn them back on, unless it's an emergency. And that is something I'm really keen about across the wider group, that we do have this clear delineation between work life and home life. Otherwise, especially with modern devices, you can be bugged at all hours by bosses and managers and so on. I'm not a fan of it.
Okay, got it. So I'm curious to know what propelled you into building DGL specifically, because as far as I understand, you were really interested in business and being a part of the working market and all that. So
I've been casting around. So I started out, our family has some connection to the honey industry in New Zealand. And I started out working with beekeepers exporting honey to Germany. And then I started buying property and did well out of it. But I was really casting around for an industry that I could get into with limited capital, where I could have some impact. I mean, it'd be pointless to say I want to own office buildings, wouldn't it? Because you need a few $1 billion, or shopping malls, or container ports. And I just felt that chemical logistics, from what I saw, was something that I could start out at a modest size and grow to a stage where I'd have some commanding market position.
Okay, I think that's a good answer. This next question, please don't take it
anything you like, David. I'm unshockable.
The next question is, how does it feel to be a multimillionaire?
It's a great question. So the first part, it's wonderful, if you know what I mean by that. But, then you sort of start to reflect carefully on who you are as a person, what's important to you in the world, where do you get your kicks? And, I've really, over the last 2 years particularly, I've really worked hard to live a low-key life. I have one house and one car. I do most of the cooking at home, and, I cook simple food. But to sit round the dinner table at 6 o'clock, and chat with your family and ask your son, how was school? I mean, that's a great, one of the greatest pleasures in life. And technically it's free, isn't it?
Yeah.
I like to travel, and I get a business class seat. Not always, but normally. A short haul I don't. I don't like fancy restaurants. I don't drink anymore. I decided to give it up after COVID. I love good wine, but I felt it wasn't good for me, so I gave it up. Reading, traveling. I play a bit of tennis. I don't have a tennis court. I like to play at the local club. There's great camaraderie there. It costs me €300 a year as a membership. So that's kind of my budget.
Nice.
So, if you've got the money, you don't need to spend it. I think you think about it if you haven't got it, if that makes sense.
Yeah.
And David, I want to tell you a very quick little story. A good friend of mine who's Italian from Milan, Alberto, he was in Rome once in the 1960s in the army, and he met the mayor of Rome's daughter, and he wanted to take her out on a date. And he asked his friend if he could borrow his fancy Alfa Romeo to take the girl out. And his friend said, if you need the Alfa Romeo to impress the girl, you're already stuffed. And I completely agree. A boy ought to be able to put on a clean shirt, sit down at a table with a girl and have a conversation and impress her with nothing more than his personality. If he has to use wealth, he's stuffed. That's my view of the world.
Yeah, I think you should tell that to all those crypto kids and and
Hey,
the
David,
influencers.
it's nothing to do with age. It's across the board, I can tell you. It's nothing to do with
Yeah.
Instagram. It's the world. Maybe I'm unrealistic or overly romantic or ambitious.
Interesting. Okay, so we're getting towards the end, but I would like to know, you have grown at 20% per annum for more than 2 decades now. So
Yep,
was
that's
that
it.
a smooth ride, or
No,
yeah? Because I'm.
it looked like the Swiss Alps. It was about as smooth as the ridgeline of the Swiss Alps. You have good years and bad
So
years, but if you put a pin at the beginning and you put a pin now, you get 20%.
and could you tell us like some of the biggest adversities you had to go through?
Well, the GFC
Uh,
was tough. I had $15 million in the bank in 2008, and the bank took it back. They said, oh, we want to reduce your debt. So they took it back, but I was in the middle of development work. It was really tough. It was just brutal. I ended up putting my money in my accountant's bank. Otherwise, I didn't feel it was safe. So that was the toughest period, 2008. Other than that, we haven't really had any significant events that come to mind.
okay, I guess it's more like day-to-day stuff that
Oh, yes,
rather
plenty of
than.
that.
Mhm. Okay. So do you have any regrets in general?
That's a very interesting question. I separated from my son's mother. She's a barrister, a lawyer, and we both worked too hard and we didn't put enough time into our marriage. And in hindsight, I have looked back and realized that I should have just slowed down a little bit. Just as interesting, David, we never went to a supermarket together. And you might think that's kind of frivolous, but you'll be surprised how important it is for a couple to go to a supermarket. There's an old saying that you spell love Time. And that's a mistake I made. I put ambition before a relationship, and I paid a price for it. So that's a clear regret.
Hmm. Okay.
And it's
Yeah. Thank you
self-inflicted.
for opening up.
Yeah, well, I don't mind telling you. You've asked me a question and I've given you a straight answer.
Mm-hmm.
Mm.
Yeah. That's actually my next my next question is, what advice do you have for young ambitious people?
Yeah,
So
so,
I don't know.
it's a good question. Read widely. That's really important. Read biographies, autobiographies, not just of business people. I don't read any management books ever. I find them dull and kind of useless. I like autobiographies and biographies. Read history. I apply the Christian standard, do unto others, treat other people in the same way you want to be treated. And it's really important, David, even for young people, to build a reputation that you are reliable, that if you're coming at 6 o'clock, you turn up at 6 o'clock. If you borrow someone's, motorbike, you return it clean as you agreed. So, you just want this reputation for being utterly reliable. If you say you're going to deliver, then you deliver. If you're going to borrow some money from the bank, you pay the interest on time and you pay the money back. And you just keep building up this goodwill. Good political
like
capital, if you like. Start young.
Nice. Yeah. Simon, I think that's all we got for today. I just want to really thank you for your time. I know you have better things to do.
No, it's been
so
a pleasure.
so yeah, just wanted
And
to thank you, and probably I'll leave down below the links to, I don't know if you have any social media or something like that, but
zero,
where can people reach out to you
zero.
or DGL?
They go through to Barbara, info at dglgroup.com, info at dglgroup.com.
Okay, so we'll leave
And
it at
social
that,
media,
and
I have enough drama, Simon, without social media. I don't need that.
yeah.
No, I wouldn't trust myself with it.
Yeah, I think that's a more conservative approach.
Oh,
So
no.
yeah.
The world's got plenty of challenges. I don't need more. David,
Okay,
it's been a
so
complete pleasure. And one day I'm going to come and look at your bridge and I'll give you a call and we'll have a coffee.